Hi, welcome to the Market Alert for Friday, the 23rd of August 2019. So, yesterday, curve inverts as traders brace for J-Hole's surprise and Boeing propels Dow higher. So, this is the important thing for today is J Powell at J-Hole to see whether he's actually going to spring any surprises, and if he doesn't, then we can expect some weakness in the market. Also yesterday, the reason the Dow moved higher was that Boeing had troubles, as you know, and it managed to sort these out. It's just waiting for some sort of approval or whatever, but that was enough to bring the market back. Personally don't believe it. I think it's more a case of the plunge protection team, which we'll look at now. So what we're going to do here is look at yesterday's price action. Sitting watching the markets, and all of a sudden, when we had the 9:30 European news, the market just took off like a rocket and went above the 200 bar moving average. So I'm just going to fast forward through this. This is the pre-market session. You can see there the buying coming in, and then whatever it was that moved the market eventually. I'm just going to scroll back a second here, because obviously I looked at the daily chart for some sort of reference. If it will turn up. It's the only problem when you have so much data, it's always difficult to see the finer points. But what I would have done there was look at the daily chart just to see where prices were. Market comes back below the 200 bar moving average, and we then see went too far there. We see the market come below the 200 bar moving average and continue lower till it finds some support here, and you can see this spike in volume as the market trades below the psychological level, and then comes back and then manages to get back above the 200 bar moving average. And this is before the market opens, so we've gone down about 130 points and then all the way back as well. And then we continue higher in the main event, but not for long. We get two buying bars, and then we get this bar here, which you can see, still high volume, the market not making much progress. We get a selling bar, which the market bounces off, comes back to 76%. And then we see the market trade lower. See some buying pressure coming back in here, then some further selling as the market fails to turn around, and then the selling disappears. And I believe the plunge protection team are responsible for this. Again, you can see this volume coming in here, holding the market after it's dropped 150, well, it's 200 points, and then moving prices all the way back to the upside. You see there as well, coming back to the 200 bar moving average, and prices then moving up. This is when I drew a 76% retracement in way before. If I just come back here, you'll see it's there. I was watching the chart. Let's see if it comes back to 76%. So at this point, drew in the 76% area. And you'll see the market trade all the way back to this, and it becomes a resistance, and then eventually breaks through. And then in the close part of the session, we see prices being slammed once more. So let's have a look at the overnight for this market. So here we see prices being slammed, the market then finding resistance at the 200 bar moving average. It took a bit of volume to get through, but now we're through. Prices have continued to move to the upside. And in the daily chart, you will see we're through the 20 bar moving average and the 76% retracement, and heading towards this high of 26,395. It's all down to what happens at the Jackson Hole Symposium, and if it's good news, then we're going to go straight up. That means good news is potentially reducing rates, more QE, if he announces anything like that. And if he doesn't, then we're going to head back down. Now, Monday, the UK markets are closed. The US is open, but it's closed the week after, if I recall. But that aside, this is the main event. So 3 p.m. Powell is going to be speaking. So I wouldn't be at all surprised to see the market in the intraday continue to keep moving to the upside, just as we've seen over the last few days. So yeah, it's all down to Powell really, but in the electronic market, expect prices to move higher. Meanwhile, in the pound, yesterday you can see pound up 1% yesterday, big bar to the upside, not a lot of volume. And the reason for this is apparently, which I must have missed it, or I've been asleep, but the pound rallied on the basis that they were close to a deal with Europe, according to the newswires, but I haven't seen anything to state this, but there you go. So price is getting back above the 200 bar moving average after trading through, and then there's a bit of selling there, but still above the 200 bar. Some buying there, bit of selling there, and then it was a blast to the upside, and then price is traded sideways. So you can see it's a news move, and it's starting to round over a bit as well there. So that's going to require more news to stay on the upside. Meanwhile, Bitcoin's become very quiet over the last 24 hours. It's not doing a lot. As you can see there in the daily charts, it's holding at the 76% retracement. The 4 hour, you can see that sideways starting to develop. And also you've got this ascending triangle formation type thing again starting to occur there. In the 15-minute, choppy yesterday, as you can see, very spiky bars, but clear volume from the traders buying into this market, particularly in this area. You can see the green buying bars there, and then moving the market higher, and then through the 200 bar moving average, but only briefly. It then returns, goes back, returns, and eventually on the overnight has managed to break through. So the short term now is back on the long side at the moment, and the 4 hour it remains short. It's still below, but the daily chart is above. So we need to see some sort of buying momentum to move the market higher. If not, then we're going to simply get a situation where we'll see prices move lower, bounce, and then move back to the downside. But keep an eye on the 200 bar moving average in this market. But we are in the thick of the holiday period now. We're getting closer to September, so things will return to normal. But at the moment, a lot of traders are absent, which is why we're seeing these markets being easily maneuvered, which is fine by me as long as there's decent size moves and they're not just trading sideways. And then finally, let's have a quick look at other things. Okay, we'll start off with Deutsche Bank. Not a lot to report. This managing to bounce higher again yesterday. Not a lot to report until we see the market come down to this level. Meanwhile, in the implied volatility, we can see that the market hasn't closed above yet in the day session, the 20 bar moving average, or closed back above on the implied volatility. I'm just going to zoom in here so you can see. So at the moment we're still trying to move higher there. The prices for the implied volatility, we've moved back up. Mislabeled this actually, that it should have been this one in the low, which was around 14 something from yesterday. So this moving a bit higher yesterday because of uncertainty in this market. One thing I have done is I've actually done this with a 10 bar moving average as well, and you can see at the moment this is actually closed above the moving average there and below here. So short term we're seeing the bounce, but I do prefer the 20 bar average. I think it gives a cleaner picture of where the market, but it's always nice to see it inside of the price activity there. And then 10-year yield, this is up to date now. You can see it's been some sort of an August for the bond market, and if you have a look here, you will see this is a 30-year bond. You can see that bond prices are heading back towards that 2016 high, and at the moment stuck at the 76%. This is a monthly chart of the 30-year bond. If I just do this, you can see how this market has been moving higher and all the time until 2016. The difference is now, of course, the yield curve is inverted, whereas in 2016 at this level it wasn't. So it's always interesting to see the relationship between bond prices and the yield. Of course, is when the bond price goes up, the yield goes down, and vice versa. And when interest rates go up, bond prices go down and yield prices move higher. So they're all inextricably linked, and this is why it's important to keep a broad picture of what's going on. So here you can see the inversion continues at some sort of pace as well. So there was a very good article on Zero Edge, which I'll put the link into as well, of Bond Trader, who said that the yield curve inversion is way from finished at the moment. So that will be interesting if you want to take a look deeper into how it's going to affect things, and also the predictive nature of inversions in bond yields in predicting recessions. Anyway, I've waffled on enough. It's bank holiday weekend. I'll be back on Tuesday. The US is open on Monday, and like I say, they go for the 2nd of September, week after, for their close. So it's a bit patchy over the next few days. I say we're getting towards the end of the holiday season though. But keep your eyes on Powell at 3 p.m. That's the biggie for today. Let's see what happens. And with that, as ever, thanks for watching. See you in the next one.